Hi guys, welcome back. Roy Cousins here, partnered up with LiteForex broker, as usual, delivering to you the top level trading analytics and education. Today, guys, I want to take you to the intraday. Usually I focus on the medium term kind of swing trading type of trading. Today I want to take you to the 1 hour chart. I'm going to present to you one of my top favorite strategies, but it is a strategy for day trading, for intraday trading, right? So we're going to focus on the 1 hour chart, but it's going to be really fascinating stuff. So bear with me. Let's go ahead and dive in. So we're going to start with general definition of the strategy and its basic conditions and so forth. Later on, we will dive right into the real-time chart to have some demonstration going on, right? So like I said, I have designed this strategy for the 1 hour chart specifically in order to have a fast kind of trading strategy, right? An intraday trading strategy. So once we set the chart on 1 hour, we want to add 3 indicators, right? The first, a moving average. We're going to set the moving average at 24, right? So it's going to be 24-hour moving average. Now, 24 because we have 24 hours in a trading day, right? Simple and easy to remember. We also want to make sure that the moving average is exponential, and that's simple. Once we cover that, we move on to the second indicator, parabolic SAR. Parabolic stop and reverse. I'm not sure if you're familiar with that indicator. It's quite an interesting indicator. Here we want to slightly change the parameters and make the step 0.05, right? Max is going to probably, if I'm not mistaken, we're going to remain the same at 0.02. The third indicator, the RSI, Relative Strength Index, is going to be slightly adjusted from its default, I believe that's 14, to 5, right? So we want to make it faster, right? With regard to the limits, on inside the indicator itself, we're going to set them at 20 and 80. All right, 20 and 80. These are the limits of this oscillator. So we got all of the components, in line. We got all the indicators. We got the chart. We're moving on to define the long side setup, for example. Right, we're going to talk about the long side. We're going to talk about the short side. Basically, we're going to start with a 24 moving average. Price needs to spike that 24-hour moving average, right? So it's gonna trade at some point beyond the moving average, but it's gonna come back, right? It's gonna close back above in this case, right? So it's gonna spike that moving average, and at the same time, we're gonna have a buy signal coming from the parabolic SAR, which means a dot below the bar in the case of a long side setup, right? It's going to be a dot above the bar in the case of a short side setup. So both conditions have to exist at the same time to get what we call a full green light setup, right? Now conditions are verified, and that's very important, by the end of the bar. So the end of the close of the bar, right, the close of the specific hour, is going to be the judgment minute. That's going to be the judgment moment, where we're going to look at the parameters and the numbers, and we're going to decide whether we have whether we've been triggered or not, right? So we do this by entering the trade at the next bar, right at the beginning of the next bar. Once we get that close, we're checking our parameters and we take the decision whether to enter at the next bar at the beginning. Now, obviously, the short side setup pretty straightforward. Everything to the opposite, right? So in this case, price will spike the 24 from below, and we'll have a parabolic sell signal with a dot above the bar, right? All the rest, obviously, remains the same. Now, when it comes to risk and money management, that's where we take action, right? So we start with having a full setup green light. We got those two conditions existing at the same time, and we pull the trigger. We enter the trade, and now we have only two conditions with which we might exit that trade, right? Let's start with the first exit. So we're going to have to follow the RSI every single bar. At the bar that RSI points out for 80 and above, right? That's the moment we're going to pull out. We're going to close the buy trade. Or we might do this. We might have to exercise the second exit here, which means the parabolic SAR flips over. So, for example, if we had a buy trade, right, the parabolic SAR would have been showing us dots below the bar. But at some point, the parabolic SAR may flip over, presenting a dot in the opposite side, right, above the bar in this case. That would be enough for us to close the position, to close that buy trade. So whichever happens first, right, will trigger the actual exit out of that trade. All right. Exit conditions, just like entry conditions, are verified at the close of the bar, right? As simple as that. And that's pretty much as far as the definition of the strategy goes, right? So I think that's probably a good time to move over and go straight to the live chart. All right, so I'm taking you here to an actual example, to a live example of a few trades that I was actually pushing in a real live account on the dollar Swiss, right? And I was very recently actually, and the segment is about from the 16th of January 2019 to 24th of January. So we're talking about 7-8 days where I had about 5 or 6 trades here. So it's probably about a day, a trade a day, right? For every currency. For every currency you will apply the strategy, you will get at least, I would say, on average, about a trade a day, right? Now, the trades are usually exited at the same day, usually. So it is a classic kind of day trading strategy. So I've already placed the indicators. As you can see, we got the parabolic SAR here, right, with the dots. You can actually see the dots coming from below, then flipping over and beginning to form on the up. We have the 24 moving average, right, in this blue line, and we also have the RSI, period 5, and also the 20 and 80 levels. I also added that data window, which is pretty important, because what we do is always check up on the close of the bar, right? So we want to make sure that we're standing at the close of the bar and we see the real data, right? It's very important. So let's take it from pretty much the beginning. We're going to start with what happened around the 18th of January, the first time that I've noticed, once I've started to follow the dollar Swiss on the 1-hour chart, I was waiting for the conditions to be met to pull the trigger, and I noticed that price was trading well above that moving average, but at some point it started to close in on that moving average, and it actually started to spike it. Take a look. It had one spike, second spike. Now all these spikes usually turning out as hammers. That's why I call this strategy the Sledge Hammer strategy, because it's kind of a hammer. It has like that hammer-like behavior once we get that spike, that touchdown on that moving average, and that's basically the very basic condition for the strategy to begin with. So we had that two touchdowns here, that two spikes, when price did meet the daily move, obviously the moving average. But take a look, we did not have a confirmation coming from the parabolic SAR, right? We needed to have here two dots. I mean, let's talk about the first one, of course. We needed to have here a dot below the bar, but we didn't. We actually had the dot above the bar, so there is no real entry. Same with the next bar, right? So there was actually no green light in this case. However, later on, well, we actually had another one right here also. That was a false one, right? Price did spike, but we didn't have a confirmation coming from the parabolic. But a few hours later, we did. Take a look at this. Price for the first time, right? For the first time, spikes with a parabolic dot below the bar. You see what I mean? So at this point, we get a green light and we enter right at the beginning of the next bar, which is roughly right here. Now, once we've entered the trade, obviously we carry it out, but we always keep an eye on the relative strength index, right? So we've entered at this bar, at the beginning of the bar. You can take a look at the end of the bar, right? You can take a look at the data window, and the RSI is on 71. So we carry on, right? And the next bar, take a look at the close. So we've entered the trade at the beginning of this bar, and the next bar you can see where the RSI is at 91. Take a look at the data window on the left, right? So we pretty much entered right here and exited right there. So that was a pretty profitable move here, right? That was the first trade I had here on the dollar Swiss in that period of time. Later on, I noticed another trigger, potential trigger, when price was beginning to cross that 280 moving, that 24-hour moving average. And take a look here. Basically, it started to spike it from below, right? So, and we had the parabolic at the right side, right above the bar. We had that dot. So I've entered a short trade here, and later on I started to follow the RSI. Take a look at the next bar. That's at 19. So boom, we're out. No questions asked. Simple as that, right? We had a small profit here. Later on, there was a loss, actually. Later on, there was a loss. I've noticed price spiking the moving average, right? Take a look right here. And we had a dot below the bar. So I entered a buy trade. However, price went against me, as you can see. And in the next bar, when I checked the parabolic star, it was still having a dot below the bar. So I had to carry on, right? But the next bar, that's where the parabolic flipped over and began to present the dot above the bar, and that's pretty much where I got out, right? So I had to take a loss here, pretty much from here to here. Not a big one. Later on, we had another trigger. Take a look at this bar right here, spiking the moving average from below with a parabolic from above, right? So we enter the trade. We enter a short trade, of course. The next bar, nothing much happened, but the parabolic was still above the bar, so we carry on. However, take a look what happens here. The second bar, parabolic flips over with a dot below the bar, so we have to pull out. And I've pulled out pretty much where I've entered, right? Right on the break-even point in this case. A few hours later, right? A few hours later, take a look at this spike right there. Right? We have a little doji here spiking the moving average with a dot below the bar, right? So we've entered, basically I've entered a buy trade here. Price went pretty well. I was, in this case, I was involved with that trade for a few good hours. Take a look how it continues to move up. Only here, we see the RSI on 80.65. Take a look on the left side, right? I mean, the parabolic is still there. I could go on, but in this case, I had to pull out right at the end of the bar, right at the beginning of the next one, and it was a pretty nice move. But it wasn't as nice as the last move I'm going to show you right now. Price was crossing the moving average again from above and beginning to establish itself below. But take a look at this spike right here on this bar. Very slight, but you can actually see it. It's visible. Price was slightly spiking the moving average, which was a good time to check up on the parabolic. He was presenting a dot above the bar, so there you go, pulling the trigger on another bearish trade. But in this case, I actually got a little bit concerned at first because price went straight against me right at the next bar, and it went pretty strongly on the upside. Take a look. But it still had a dot above the price, right above the bar. So I kept it open and I carried on, and price reversed and started to slide pretty strongly on the downside. Take a look all across these bars. The parabolic SAR is still in business, where the RSI, take a look where it presents. Still here, it's still 24, right here at the end of that bar. RSI is still above 20, so I carried the position all the way to the next bar, to the end of the bar. Right here, price RSI was on 17.5, and that was the exit. That was a pretty profitable move. So I think you got the picture, right? I think you're pretty much on top of what needs to be done here when it comes to the basic conditions, the very terms and conditions in which you pull the trigger, enter the trade, and exit the trade. It's a pretty fast strategy, but it's a pretty good one. So I hope you enjoyed that session, guys. I hope you will use this strategy to your benefit. And that's about that for today. Until next time, be well.